Hi, good morning. Ross McInnes from Australian Investment Research Services. Thanks for joining us and hope you're having a good day. Better night overnight for the markets. Our view has been for the last fortnight that there are opportunities here medium term to buy dips and the market represented some value, but that you faced short-term volatility. This has occurred on the positive this time this morning with Wall Street rallying quite strongly, about 2.5%. The key US S&P 500 index closing up above 1,080, which has been our pivot point at 1,091. This is driven by the reversal of some heavy selling we saw in British Petroleum on Wednesday night when they thought there were going to be criminal charges against BP. This is still in play, but buyers came back into the energy sector and pushed the Wall Street up higher. Again, we're seeing, as traditionally we see this, the last hour of trading, very important in the US, and again we saw the market rally quite strongly into that close. So the overall thing is we're still getting this volatility. Markets trying to assess whether Europe is going to cause a global recession. Looks decreasingly likely at this point, but clearly, there remain risks that we have to keep monitoring over the next 60 days as we see the data coming out of Europe. In this respect, we do have Euro retail sales, although it's probably a little bit historical given it's April numbers rather than May. We really need to see the May and June numbers coming out of Europe to determine whether this financial shock is creating another real economic shock. On the day, Australian All Ords and S&P 200 indexes are likely to open higher. Yesterday afternoon we saw the Asian markets get sold off pretty aggressively. Nikkei getting hit again. Part of that was due to the Japanese Prime Minister resigning and his deputy ahead of the July 11 upper house elections. He was very unpopular, but again, obviously it reinforces the political risk that's still present in the G3 with the UK, obviously with a joint government. With that, we're seeing S&P 200 target today above 4,450 with 4,500 overhead. There's also some rumblings that the government and the resource companies may come to a deal on the new resources tax, despite the fact that BCA yesterday, Business Council of Australia, came out and said that the design of the tax was not appropriate and needed to be heavily modified. So that story, as per the rally mid last week, definitely going to help resource stocks today. So we're looking, as we said, at that 4,500 level. For the Australian dollar, it held 82.80 yesterday afternoon for the second day in a row. The key there is whether the euro can hold 121.80, and the Australian dollar is also helped by the political risk in Japan with a little bit of selling in the yen. It's 92.10 this morning, dollar yen, and 92.50 has been a very big pivot point for that market over the last 12 months. So looking at that areas. On the day, the Aussie probably got resistance around 84.50. It's currently 84.30, and we'll see whether we can continue this recovery rally. We had that this time last week as well, but the market sold off early in the week on Spain getting downgraded and just general Eurozone banking fears. So these undercurrents are still in the market, so we expect more volatility, but overall we're going to drift higher as per the run of data over the last fortnight, which has shown the US economy does seem to be getting on better footing slowly but surely, and that'll be tested tomorrow night by US payroll. So thanks very much, and keep an eye on our Twitter account, AIRS Invest. So thanks a lot. Bye bye.